Okay, welcome to this video. As you know, most of my work focuses on the actual market manipulation, on the smart money cartel, how it moves the price against all the other market participants, how it does stop runs, how it plays all those games. Then I talk also a lot about broker manipulation, etc. Now, this video, however, is different. In this video I will look at manipulation and scams within the dumb money, so to speak. So we're talking about entities who have engaged in questionable and illegal behavior, as well as people, and who have, been convicted and prosecuted for these deeds. And I should also say that within this video I do not focus on the very small fish, like here, those guys trying to promote binary option brokers and this kind of stuff. They seem to have a fable for gold-plated cars. So I will not talk much about these smaller cases, like here, Elijah Fesco has been jailed for 2.5 years. But I will neither talk about big cases like this one, like the rock traders, like Jerome Caviel, where he lost billions and billions of dollars. This deserves a video on its own, and it's a different context, but very interesting nevertheless, because you can see how people at large institutions would like to be part of the smart money, but they're not, and they try to scam their way out of it. They wanted to be profitable traders, but because they were not part of algorithmic trading teams, and they were manual trading and whatever, they tried to basically engage in fraud and hide losses and, give the impression they would make huge profits for the bank, hoping to earn a bonus. So this is a different topic. This is basically about how there was a professional setup in place, but people found very complicated ways of getting around it and to trick the system, so to speak. But in this presentation, I will not do that. I talk about the medium cases. Yeah, let's say between 5 million to a few hundred million in damage, where basically there was no professional setup in place, So quite simple cases, really. And what I did is I picked 3 different cases for you to show. And what I will do in the end of this presentation, I will present a checklist which should help you to avoid falling victims to something like this. Okay, let's get started. The first case is Alex Hope. And it's a quite shocking case, really. I mean, let's get to it. Fraudulent forex trader gets 7 years. Has been sent down for 7 years after being found guilty of defrauding investors of around £2.25 million. More than 100 investors entrusted £5.5 million with Hope, who made out he was a trader with a flair for trading on the foreign exchange markets. In fact, he spent much of the money on himself, including more than £1 million in a casino, over £200,000 on designer watches and shoes, £60,000 on foreign travel, and £600,000 in bars and nightclubs in London, Miami, and New York. This is absolutely shocking, okay? And it's very difficult to understand how this could happen in the first place, because what I will show you later on, and that's the main message of this video, any professional vehicle which involves, trading other people's or other entities' money in one way or another, will have a professional setup which prevents something like this from happening. But what you will see is that these things were not in place. And that's why literally, like this guy, he took advantage of the investment funds of investors. So he was supposed to trade their money, but he actually stole the money. And apparently was able to access the accounts to just do transfers. And this is something which should be impossible in the first place if there is any minimum professional standard for an investment or trading vehicle. Another article, fraudster who passed himself off as city boy jailed Conman, who claimed to be a high-flying financier, has been jailed after he was caught operating a complex Ponzi scheme defrauding investors of thousands of pounds. Alex Hope, 26, posted the city financier to create a multi-million Ponzi scheme to fund his gambling habits. I mean, look, no professional trader, okay, who has taken risks and, you know, would display or waste hard-earned money in any of, you know, in this way. He would not waste it on, you know, champagne and do those pictures, you know, and, you know, then even apparently whatever went on in this guy's head, he must have completely lost touch to reality. It's difficult to understand what this guy was up to. Apparently he was a caterer before he claimed to be a trader. So no background neither. But it's interesting to look at how this could all happen in the first place, and that's what we'll do here. But, you know, as a general note, I mean, you know, if you see something like this guy is supposed to trade for you, it should make you worry already. Okay? I mean, professional traders, they will not do that. And, you know, they understand the value of risk and return. They will not do aggressive marketing like this. He apparently wanted to have media attention by spending a few $100,000 in a nightclub and so on. So that's really the shocking part. Total receipts from the fraud with Von Butlow. There was the other guy who introduced most of the money, Raj von Butlow. We'll look at him as well in a second. So 5.5 million pounds. Butlow brought in 4.292 million, so most of it. Von Butlow must have been aware the claims would be or may be untrue, so it was extremely reckless of him to make the claims he did. Speaking in mitigation, he blamed his co-defendant for leading him into fraud. He said the scheme was relatively unsophisticated. Okay, and that's the most shocking part about it. I mean, apart from the fact that apparently they were running a scheme which was in no way authorized to do what they did. It was a super simple setup where there was no checks and balances in place, no third party, no best practices, nothing. Okay? And this is not professional. This is how guys like this one could just take advantage. And of course it doesn't work. I mean, these guys get caught, you know. It's just a matter of time. So it's difficult to understand how they even try to do something like this in the first place. But I'll come to this later. Alex Soap, it's from an older article, 23, who claims he has earned a fortune by trading foreign currencies, is said to have forked up 125k on a single bottle of champagne, along with 60k in other beverages and a 18.5k tip. I mean, come on, guys. And actually, I found those videos. Let's look at them as well, just to give you an impression.
Alex is last time's champion, so he's here to retain his belt.
Yes. Absolutely, yeah, it's going to be a good night, we'll make sure.
How are you finding it? Do you love it?
Yeah, it's good, it's different this year.
See, he's soaking, look at him!
Because you're going to lead by example, I'm fighting.
I mean, you know, absolutely ridiculous. I mean, you know. And I remember when, you know, the fraud was not, you know, exposed yet, and he had a website running, and people were saying, oh, this guy is star trader, whatever. And let's look at the other guy, Raj Shastri, or Raj von Baldo, who was a UK businessman. He got 2 years in jail, and who introduced the money. Look at his video, 2009.
My dad said to me, if you want to do something, find the best person you can and copy them. Nowhere in English laws that say you need a deposit to buy a house. There's an old saying, don't learn by your mistakes, learn by other people. You know, there's nothing as safe as bricks and mortar.
"48-year-old Raj Shastri has created a £7 million property empire from scratch in only 5 years.
Ever wondered how to get your foot in the market, or even how to make your millions through property development? Well, it's simple apparently, according to my guest, property entrepreneur Raj Shastri.
On my 40th birthday, you know, I had a normal job like anybody else, and I had a big party, and I thought whatever I do in the next 10 years will have a great bearing on my old age. I booked on the property course and arrived in a rented room with no knowledge in property at £950, so it wasn't a very, very good start. And I used to open those curtains every day, those horrible chintzy curtains in this horrible house, I think, what am I going to do today to get out of here?
What could you do for me?
Quite a lot. I won't charge you too much either.
I mean, you know, this is shocking. And, you know, as if it doesn't get bad enough, look at this more recent article. Rock trader was allowed out of prison to raise money for food banks, spent the cash on Rihanna tickets, court hears. So, I mean, you know, this is getting even more ridiculous now. And this is the official Financial Conduct Authority statement. You see the link here. Alex Hope sentenced to 16-month imprisonment for perverting the course of justice. Today at Southwark Crown Court, Alex Hope was sentenced to 60 months. Mr. Hope repeatedly misled the courts and the FCA, concealing monies that should have been used to compensate victims. Throughout the course of proceedings, he has shown contempt not only to the court but also those he has harmed. Today's outcome sends a clear message. We will continue to pursue wrongdoers and hold them fully to account. So yeah, this is a shocking case from the last years. But what I wanted to emphasize is, yes, apart from the fact that this is absolutely reckless and fraudulent, they, you know, they had no professional setup in place which would prevent any of that, you know. And I'm not talking about, you know, big hedge funds. I mean, they have the resources to, you know, spend a lot on, you know, other parties and service providers who can prevent it. Even as a smaller fund, you know, administrators are available to you, and I will show that later. And, you know, even if it's not a fund, if it's a managed account platform or whatever it is, I'm not sure what kind of structure they had here. But, you know, apparently it was basically they set up a company and then they started trading around or were acting as if they would. And this is not allowed, okay? You need to have the right vehicle under the right law, under the right jurisdiction with a professional setup, of course, you know? Otherwise, these things are possible. And nothing good will come out of it. I mean, one wonders what's in this guy's head. And even after he was sentenced to jail, and then, you know, even then he continues that kind of behavior, I mean, it's difficult to understand. This guy must have severe psychological issues. You know, what's driving that? Difficult to understand. And you know, it's also difficult to understand what he thought would happen, you know. He was setting him up for this kind of downfall. Okay. Let's get to the next case. It's a bit older, but there are similarities, as you will see. Bo Diamond, he also engaged in a very popular FX scam. Sentenced to 15.5 years prison. A fraudulent, sophisticated Ponzi scheme that made victims out of 193 people who thought they were members of a foreign currency trading club. Diamond lost $15 million in trading, gave back $50 million to investors who thought they were making high monthly profits, spent another $7 million on gambling trips to Las Vegas, and a $200,000 Lamborghini sports car, an analysis revealed. So, you know, it is the same principle, okay? There's no professional setup in place whatsoever, okay? And he's able to shift money around to take, for example, money from new investors, give it to old investors, you know, making them think these are profits, etc. Similar to the big cases like Madoff, okay, who did this stuff in a big way, and who had a setup in place, but, you know, was able to come up with a sophisticated fraud to get around it and so on, okay. But this is a simpler version, so to speak. And again, this shouldn't even be possible, you know. And if you ever consider to, you know, invest in anyone, you should check for a professional setup. Anyways, let's go to another case which is recent. Sidney Lemons in Dubai. He was sentenced to 500 years in prison now. And this is another shocking case. This company was called Essential. So that happened in Dubai. Lemos to appeal against the 500-year sentence. Fraudster handed 500 years for the role in a $200 million exchange scam has launched an appeal against the sentence, one of the heaviest ever issued in the United Arab Emirates. Manager set out for $25,000 deposit. An account could be opened with the money invested in foreign currency and traded when markets fluctuated using a complicated computer algorithm. Profits of up to 120% were promised. Okay, so there are different red flags. Okay, one is that, you know, they wanted to have a lot of small accounts, like $25,000. That's a small amount for any kind of professional investment in the first place. That's one red flag. Then they promised guaranteed returns. This is another red flag. Okay, any professional trader doesn't do that. They will make you aware of the risks. They are aware themselves that there's, you know, no certainty in trading. It's all about probabilities. And apart from the strategy, there are other risk factors. There are force majeure risk factors. Remember, for example, the Euro-Swissy move. Okay, so no, this is a big red flag if you see somebody. And then, of course, you know, promising to return so much, 120%. I mean, look what the best hedge funds do in returns. Look what you know, the best systems or FX traders do. You will see that, you know, there's a certain range of returns, and there are drawdowns. You know, the vast majority of profitable traders will have, you know, several months of drawdown. They will, you know, have reasonable returns even if they are high risk. So we're not talking about, you know, crazy numbers. You know, they will know when they lose, you know, when they have a potential for upside. But, you know, there's no certainty whatsoever regarding that. But what you can see from all these cases, yeah, and again, these are not the small fish cases like those binary option introducers. It's not the huge cases like Madoff. It's not the rogue trader cases in investment banks. This is basically the, let's say, medium-sized FX scams. And by now you should be able to see what the pattern is, okay? And that leads us to the main message of this video. And I put together this checklist, okay? And that's not difficult to understand. So, whenever you consider, you know, to either, you know, invest into another trader, invest in a fund, invest in a managed account, you know, and be part of a club or whatever, buy a product, whatever it is, there are basic things you need to check for, okay? And any professional trader will confirm that, you know? So let's start. You need to be aware, what's the jurisdiction? Where is the vehicle located, okay? What is the financial authority that's responsible for it? Now, obviously, big funds, big hedge funds, they, for example, have a physical office in a big financial center, and then they have an offshore registration for tax reasons or something like this. Okay, fair enough. And then there are onshore funds who are, you know, located and registered in the same location. But you need to know, you know, what the situation is. Okay, and then, of course, look at the vehicle. What are we talking about? You know, in many jurisdictions, there are specific laws, okay, for, let's say, private funds, you know, bigger funds, experienced investor funds. You know, they will define what kind of vehicles the law allows, and then also the implications, restrictions on marketing, restrictions of number of investors. You know, they will define it. They will define what's regulated, what's not regulated. You need to know that. You need to be aware of that, okay? And obviously the company needs to have a company number. It will have a certificate of incorporation, okay? It needs to actually exist. And then, guess what? Directors and people. Yeah, who is in charge of the project? What are the people? And, you know, if the people have real profiles, real names, real business networks, you know, you will find traces of their previous work. They will have a LinkedIn network, maybe. They will, you know, have recommendations. Maybe they appear in articles or books. You know, you can do research and find something about these people. And you can see, do they have degrees in that area, economics, finance, whatever. Do they have certificates? You know, what's the background? Where did they work before? You know, this guy, Alex Hoppe, was a caterer before he did this. I mean, I don't think he had any degree. So, you know, that obviously is a red flag. Not saying, you know, this is automatically like, you know, a reason to skip the whole project. But, you know, at least look at what people you're dealing with. And there will be traces of these. Now, then the physical office. Where are these guys located? Where do they sit? Where are their computers? Okay, what's the setup? Maybe you can, you know, go by and look at it. You know, make an appointment and look how they operate. How does it look like? And this here, I cannot overemphasize it enough. Fund administrator in any professional vehicle, you know, you will have not only checks and balances, you will have third-party arrangements. That means the trader is not supposed to just do transfers and move money around himself. The trader is responsible for implementing the strategy, for trading. Now, the fund administrator, for example, he will make transfers. He will deal with, you know, subscriptions. He will make, you know, a net asset value. You know, he will, as a third neutral party, he will do all that. He will document what's happening. He will do resolutions, minutes, you know. There may be, for example, a signatory list where, you know, one of the required signatures is from the trader to do transfer or something. But, you know, it's not common that the trader will just move money around himself, as it happened in all those FOREX scams. Okay, so any professional setup, no matter how small it is, by the way, it doesn't need to be a multi-million-dollar fund, but still, it needs to be in place. And I can also tell you, do not try to save on those service providers. If you are a trader and you consider to trade other people's money, it's in your interest to keep things clean. Okay, do not try to save costs by not having this stuff in place. In some jurisdictions, you may not be required by law to have an administrator, but follow best practices. Okay, always have different eyes on a subject matter. Okay, this prevents a lot of issues in the first place. And even if it's a managed account, whatever, there needs to be an arrangement like this. Okay, if it's not in place, it's not professional. All these cases I showed you did not have professional setups. In fact, they had setups which were not even allowed under the respective jurisdictions. And there will be a PPM, a private placement memorandum, or a similar document. And guess what? In this document, there will be elaborate disclaimers, there will be risk disclaimers, disclosures. Okay, there will be information about the people, about the strategy, about the registered address, about risks. This is all in there. You know, a professional vehicle has this in place. They're not, you know, promising you 120% returns. They will tell you, look, well, that's our strategy. These are the risks. There's no guarantee of return. It may be a loss or failure, but you know what, at least what the risks are. And there will be a risk category, you know. The low risk, medium risk, high risk funds. You know, and we'll give you an idea. For example, a high risk fund, which has, you know, a high percentage probability of also failing or losing, is, for example, more suited to a high net worth individual who already has, you know, a diversified stock portfolio, who already has a real estate income, who already has a number of companies and startups he invested in, you know, who has different income streams, and now he wants to add a dynamic satellite to his portfolio, you know, being aware that, you know, it can fail, but he may be happy as long as, you know, in overall portfolio it makes sense. Okay, that's a different thing than, you know, for example, a vehicle which says a low risk, but then the low risk, of course, maybe the drawdown is limited, but then of course the returns are limited. This is very relevant. It will be said in the PPM or document, offering document, what kind of risk we're dealing with. For example, short-term FX funds are high risk, of course. And then, of course, there needs to be a custodian in place, a bank, okay? There are separation of accounts in a professional vehicle. The money will, for example, then, if it's invested, it first goes to a bank account at the custodian, and then the fund administrator, for example, calculates the shares and then sends the money to the broker account, and then this money can be traded via the platform, via the traders. You see, but there are different parties involved, and you know, it's not that one party can just move money around. If it's the case, you're setting yourself up for trouble. And then, of course, brokers. Who are the brokers? You know, where's the money? Do the brokers have some kind of security regarding defaults or, you know, black swan events? Remember, for example, the Euro-Swissy event. Yes, these are things you should know in the first place whenever you consider, you know, to invest someone, to stake someone, to, you know, let somebody else trade for you, whatever it is. Okay? And if you are a trader who considers to trade other people's money and to take on that demanding task, I tell you, it's in your own very interest to have a proper setup in place. Okay? It saves you issues. Okay? Do not save money on that. Spend the money on in a setup. Okay? So where you have an administrator doing all those tasks I described. Okay, maybe in 1 out of 1,000 cases where there's an in-house fund and there's only one single investor, and there's no other investor involved, maybe then you say, well, we already have something in-house. But even then it may be a good idea voluntarily to take on, a fund administrator. They have a third party, checking it. A licensed party who was allowed to do that kind of business. So that way you make sure that nobody can just move around money like it happened in those FX scams. Okay? If that's not in place, stay away as an investor. If you are a trader, do not dare to trade other people's money without having this stuff in place. Yeah? Take this advice. It's very important. Professional traders, they know there is no guarantee of return. But it needs to be documented, that you express the risks, that, the investor signed that he's aware of the risks. He's aware of the, risk category of the vehicle. He's aware of the people, the jurisdiction. And then last but not least, meet them face to face, they should be able to make an appointment with you and to give you, some time on a day and, to explain to you, maybe show you what they do, how they trade. Or, these days, you can ask them, look, I'm interested in general, but why don't you, over some weeks, a month, send me, analysis, send me your trade logic and narrative, what you do. You may add you on a WhatsApp group or whatever and show you what he does for some time. Do that. You can actually understand what's going on. The more you understand it, the product, the vehicle, the better for everyone. Okay, and then check for the professional approach. What are these guys doing? How are they doing it? What's the risk against the reward? A trader, when you meet him, he will tell you, look, he will not make an aggressive marketing speech. Professional traders don't do it. They don't say, oh, make 100%. No. They say, look, this is a strategy. We have a potential upside. Here are the risks. We will not win every month. We will have losing trades. It's all part of the game. Then you can also check for the story. What's the story of the people? What's the story of the company? Why did they set up? How did they set up? What's their plan for the future? Did they, change the strategy? You can ask them. They will tell you. They will tell you a story. And you can, invest some time into understanding why they are where they are, what they're doing. And above all, of course, understand the risks. In trading, it's all about, managing risks versus a potential return. Okay, people may implement the strategy well and do everything they can, and still it may be a loss in the end. This can always happen, apart from the fact that there will always be drawdowns. Trading implies that there are periods of drawdowns, and this is part of the game, and everybody knows it. It's mentioned in the documents. You should be aware of it. Okay, you should, for example, not invest money you depend on, or invest in a vehicle in order to get income. This is not what this is supposed to be for. Okay, dynamic vehicles, where there's like FX trading, whatever, they are far away from mutual funds. Okay, the idea is that you may avoid 5-6 year drawdowns like in the stock market. However, there will be drawdowns for other reasons over shorter time periods. Apart from the fact that there can be black swan events as well. I mean, remember the Euro Swiss 4,000 pip move. There were companies which had stop losses in place, and the stop losses didn't get filled because the market gapped, or the other side didn't honor the contract, and they got blown out. They went bankrupt. Okay, it's not that the traders did anything wrong. It's just that there was this one black swan event which wiped it out. It's not in their control. Okay, so trading has those kind of inherent risks, and people know that, and especially if you consider engaging in something like this, you will need to sign documents where you confirm that you're aware of these things, such as the PPM. Okay? And if these minimum requirements would have been in place, those guys wouldn't even be physically able to do what they did. Okay? I mean, at the end of the day, there would have been, these arrangements in place, apart from good practices, where, somebody would have realized it early on, or, people wouldn't have even engaged in it. They would have said, listen, okay, but how do you do it? And you would say, oh, I'll set up a company. You know what? Just send the money there, I trade it, I send it back. I mean, come on, whether what you're doing is a regulated, unregulated, or licensed or unlicensed activity. No jurisdiction will allow for no proper jurisdiction with a minimum degree of conduct and regulation will allow for such a simple setup to operate. They will have requirements what has to be in place in order for such a business to be conducted, especially after the financial crisis. The compliance increased a lot for the small guys, unfortunately, not so much for the big guys, but that's another topic. But either way, okay, take these things seriously. Do not save costs by trying to save costs for those service providers, and then you end up having a non-professional setup, and then all kinds of issues will occur. Okay, I hope you enjoyed that. Stay safe.